Hey, what's going on, guys? Hope you're having a good day. As always, my name is Michael, and thanks for joining me today. So today I'm going to be talking about credit cards, credit card interest rates, and balance transfers. All right, guys, I've done a lot of work with viewers and members through the car loan side of things as far as like refinancing and whatnot. But now I kind of want to start tackling some credit card stuff because a lot of members and viewers and subscribers, they have credit card debt and they don't know what to do with it. Now, there's really two things that I would recommend. The first one is, if it's possible, do my whole car loan trick. And if you don't know what I'm talking about, I'll have a link below to that video because I think it is the best thing to do. If that's not an option, then that's what I want to talk about today. Credit card balance transfers. Now, there's one other thing I want to say before I get started, and that is I'm going to start doing more shout outs. Guys, I really liked my last video when I was able to share other viewer success stories with you, and I want to keep going with this, so please share all of the success stories that you can, and I'm going to start doing as many shout outs as I can during my videos before I get kind of onto the main subject. So for the video today, I've got three shout outs I want to give out. The first one is to Joe Salim, and also, guys, I'm sorry if I mispronounce your names, but Joe Salim in the last year took his credit score from 670 to 790. Like, I don't know the exact number, but I imagine that's like in the top 1 to 2% in the entire nation. So very nice work there. Just as good, and in some ways much better, is in Charlesworth 86 took his credit score from 580 to 700. And guys, if you don't know how big of a difference is, you're gonna see here in a little bit. But that's like going from not the greatest credit to what some banks would consider bad credit, all the way over to not just, oh, good job, you made your credit score a little bit better, but to good credit. Awesome work on that. And lastly, this may be one of my personal favorites, but shout out to Avinash Purota. But you talked about, you closed out your banking account and moved over to a credit union based off my whole banks versus credit union videos, and because of that, you saved $30 a month. Guys, monthly service fees are stupid for bank accounts. Don't pay them. Avinash, you just saved $360 in 1 year. Imagine how many years you could have stayed with that bank paying that fee, and the savings could be in the thousands. So shout out to all of you guys. I love your success. I'm so happy that you've joined this community. You're learning from it. You're benefiting from it. And guys, if anyone else has success stories, do not hesitate to comment below. Let me know, but let's get started. Now, if you don't know what a balance transfer is, it's all very simple, really. All you're saying is that, look, I've got a credit card over here at a very high interest rate, and I owe money on this credit card. So what I want to do is open up another credit card and move that debt onto this credit card. That way I've transferred the balance over to this new credit card, and I've got it at this new credit card interest rate. Okay, it's again really that simple. You're paying off one credit card, moving the debt over to another credit card at a lower rate. The things that you need to watch out for are things like balance transfer fees. Most places should not charge a fee, but however, there are many places that will. Like a lot of the places that charge you 0% for 12 months will say, okay, yeah, you have 0% interest for a year. After that year, your rate will jump up a little bit. But in addition to that, maybe they charge you a flat 3 or 4%. So, yeah, there's no interest, but they're going to charge you a 4% fee. That's not interest free. That's 4%. So make sure you watch out for things like those. What I want to go over here next is kind of what interest rates you should look for. I'm going to use my credit union for example, just so you can see what interest rates look like at some credit unions that offer pretty good interest rates. That way you can kind of use it as a comparison for, do I have a good interest rate right now? And if not, maybe I really need to look into this whole balance transfer thing. So for members that have, I'm not going to lie, kind of the low credit scores, we're talking about anything between 599 or lower, our interest rates are 17.9%. Pretty high interest rates, not going to lie. From 600 to 639, the rate is 14.9%, so still pretty high. From 640 and higher, I think that's when we get into like decent credit card interest rates. But from 640 to 679, the rate is 10.9%. From 680 to 739, we're looking at 8.9%. And then from 740 and higher, we're at 5.9%. So I want you guys to use that kind of as a reference sheet, right? Like, if your credit card rates are higher than those that I just said, I really think you should look into do a balance transfer, because it's all pretty simple to do. Another thing you need to look out for is when you're doing a balance transfer, guys, all you're telling is the new credit card company to essentially pay off your old credit card company, right? They will literally like send them a check or a payment and say, all right, that person's debt is paid off, and then they'll put that dollar amount onto your new card and you start paying the new company. Well, what if you say, okay, guys, I have, $2,000 over at this other credit card company. I need you to pay it off, and I'll start paying you guys instead. So the place pays them the $2,000, but you actually had some pending transactions on the old card, right? Well, those pending transactions you weren't aware of, and so you're thinking your old credit card is paid off. Those 4 pending transactions go through. You don't pay them because you think the card's paid off. Now you're late on that old card. Now you get a late payment fee. Now your credit score goes down because you made a late payment. All of this is to say, guys, make sure you do your due diligence and make sure that that card is paid off in full. Okay, make sure it's paid off, because you do not want that mistake to happen to you, because it'll cause a lot of frustrating consequences because of it. Another thing to pay attention to is what to do with that old credit card after you transfer the balance onto the new credit card. A lot of people think, okay, well, that card's paid off, I'm not going to use it anymore, let's just close it out. I would really, really caution you against that, because closing out that credit card is going to hurt your credit score a little bit, right? Keep it open. As long as it doesn't have an annual fee. If it does not charge you an annual fee, keep it open, don't ever use it, and just leave it aside. But do not close it out just yet, because we're trying to build credit at the same time. Now, the last thing I want to talk about, and I think this goes without saying, is, guys, once that other card, the balance transfer has gone through, do not use the old card. Guys, it's paid off. Keep it paid off. Don't accumulate more debt just because the balance on it is now 0. Don't use it. Keep it at 0. I told you before, don't close it, but do not use that card. Do not say, all right, I've got the balance transferred. Now I've got this card that I can use again all over, because now you've just doubled your debt, right? That's stupid. Don't make that mistake. Cut that card up if you want. Like I said earlier, keep it open, but do not use it. All right, that is absolutely 100% an important rule to follow. Don't use that credit card after you've done the balance transfer. So those pretty much cover the basics of credit card balance transfers. Like I said, I want to try and do more work on this front. If you guys cannot take advantage of the car loan situation, I want you guys to still do something with your credit card debt. A lot of people have been talking to me about they've opened up their Wealthfront account, and I think all that stuff is great. Investing for your future is a fantastic thing to do, but I also think you should really focus on investing after most of your debt is paid off, right? You don't know what kind of return you're going to get on your investing stuff, but you know that if you've got a 20% credit card, you are losing a lot of money due to that credit card interest. Not only that, but if you've only got maybe $1,000 that you can invest, but you've got $8,000 worth of credit card debt, well, clearly that is going to be much more damaging than your investments are going to be much more rewarding, if that makes sense, right? So focus on paying down your debts as quick as possible. And when it comes to paying off debts as quick as possible, your interest rates have a big part of how fast you can do that and how much interest you pay in the long run. So that's what I want to talk about today. Guys, comment below if you've got any questions that you have, because again, if I can help you guys out, if you've got credit card debt and we can kind of get it at a lower rate, that's going to go towards me helping my channel goal of saving you guys $150,000 of interest this year. Also, if you guys have not commented on my last video, make sure to do that so you're entered into the cash prize giveaway at the end of the month. But as always, thank you so much for watching, guys. I'm off to go do a road trip to New Orleans this weekend, so I'm sorry if this video seems somewhat short, but I wanted to make sure I got something out to you guys. But have a good weekend. Take care. I'll see y'all next week.
Hey guys, thanks again for watching this video. I hope you learned something new from it and you were able to strengthen your financial position. I'm going to keep coming out with more videos, so please stay tuned, but go ahead and like, subscribe, comment, and have a good day.